Hello, everyone. Welcome to the Uday knowledge session for cluster-based financing. I'm going to just, as we usually do, I'm just going to give it 2 more minutes. This is Mansi. I'm from the PwC team. We help manage the fintech platform, the Uday fintech education platform for Mumbai Fintech Hub. We're going to just give it 2 more minutes, and probably by 4:03, I will begin and bring over Sovan, who's joined us from iFinance. All right. I think I can begin now. I hope everyone can hear me clearly. So, welcome and thank you, everyone. Good afternoon for this. Welcome to everyone to the 23rd edition of the Uday Knowledge Sessions. These are brought to you by Mumbai Fintech Hub and PwC. Just a quick brief for those of you who are new to this. Mumbai Fintech Hub, which is also called MFH, it is the fintech vertical of Government of Maharashtra, and they focus on the growth of fintech sector. And Uday platform has been built with a key focus on building the fintech talent through education. It is their flagship program, and we help to assist students like you all who are interested in pursuing careers in fintech by equipping you with knowledge, information, courses that you would like to explore for such a career. It is the Uday Knowledge Sessions, the ones that you're part of today, is specifically focused on providing you with fintech knowledge related to the basics of the different fintech sectors and concepts. And we do this by inviting experts and industry players to come and provide their perspective, so you can hear from them, what is the whole models and the business models that they operate on for the different sectors under fintech. Today, we are very excited to have Sovan, who is the Deputy Vice President and Head of Strategy at Aye Finance. He has 6 years of industry experience and has been with Aye Finance for 4 years. He's an MBA from IMT Ghaziabad, and his area of interest, rightly so, include fintech, lending, and financial inclusion. And he was previously associated with TCS. Welcome, Sovan. Sovan, we are so excited to have you. PwC particularly had interacted with with Aye Finance through a MSME convention called GAME that we were part of. And so Aye Finance was identified as one of the key innovators in the MSME lending space, from which we had an association, and we invited Sovan to speak to our students, because there is a cluster-based financing model is a true innovation which helps to improve MSME lending. And that's what Sovan is here to talk to us about. As all previous sessions, this will be an interactive session. Sovan will cover some of the core concepts, and then we will address the questions that we have received at the time of registration. And also there is a Q&A box at in your if you can see on your screen, you can click on that Q&A box and put in your questions through the session, or when we open it up, we will I will pick up the questions whichever have not been covered, and bring them up to Sovan to address. Without much further, just let's make sure all of us are mute throughout the session while Sovan is presenting, and then we can take the questions through the Q&A chat box. So without much ado, I would like to invite Sovan. Hi, Sovan.
Thank you, Mansi. Thank you, PwC team, for inviting me today. I must say, today is a great platform, giving an opportunity for the students to get a sense of the industry. And I think kudos to the team for conceptualizing this platform. Let me share my screen. I hope it's visible.
Yes.
Guys, let's make it as interactive as possible. Stop me wherever there's a question, whatever you want to ask. Please feel free to stop me in between. To give a sense of what to expect in the next 30 odd minutes, I would briefly touch upon the concept of lending. Many of you guys might be knowing it. Just getting an understanding of what exactly is lending, what are the core concepts around it. Move to MSME space, the impact it has on the Indian economy, the problems associated with it, how cluster-based financing solves for some of the problems, briefly touch upon Aye Finance, the model, and then get into a bit detail into the cluster-based financing model, how exactly it works, and then obviously we can talk about career opportunities, what are the different roles that you can expect once you get into industry. So that's from where I would start. So when you talk about lending is pretty simple business. When you look from the top, it looks very simple. You give money to someone or an asset to someone, expecting them to return it in a certain time period, and obviously you earn an interest on top of that. So that interest obviously is the revenue driver for the business model as such. And if you talk about the Indian financial services domain today, I think it would not be wrong to say that lending is the key business driver for key revenue driver for many of the companies. Lending is the business model which earns money for many companies. So definitely from that point of view, you would see a lot of companies joining the space, be it on lending into the retail sector, lending into the MSME space. You'd see a lot of companies entering this space. But when you get into the detail of lending, it's not as simple as it looks, that you give money, people would return it. So that's not as simple as that. So if you break down the business model or break down the process of lending, there would be three key components associated with it. One is obviously source. How do you really source clients? So a lot of innovation has happened in component, which is the sourcing. There's a lot of digital influx coming into the picture. How do you really onboard customers digitally? How do you really find customers from their searches? So there's a lot of innovation that has happened in the sourcing space. The next important thing is underwriting, because this is the how do you really price your risk? How do you really assess the risk of who to give, and how do you really price it? So underwriting is one big key component of the entire lending process. Then the third piece, which is ideally the servicing and the collections aspect, which sometimes people forget that this can be one of the important things. But whenever there's a downturn in the industry, you would realize collections and servicing is the single most important thing which makes a company alive or stay afloat. So these are the three main. When we're talking about cluster-based lending, the major innovation is in the space of underwriting this case. There are problems associated with it, the space that we are talking of, and obviously cluster-based underwriting somehow solves for these problems. So when you talk about underwriting per se, there are three main components that people look for. There's a willingness component, there's an ability component, there's a traceability component. So just giving an example, if I have lent to someone, what guy has the willingness to pay back the loan. The next thing is whether the guy has the ability to pay back the loan. I've given a 1 lakh rupee loan to someone. The guy is willing to pay me back, but he somehow doesn't have the ability to pay back my loan. So somehow I won't give the loan to this individual. The last component is traceability. So can I trace the individual once I've given him a particular loan per se? So these are the three main concepts of underwriting. So whenever an underwriter or a risk assessor sits down, these are the three main components that he's going to evaluate every client or every customer upon. Now, whatever business model you would identify from the lending space, somewhat would be fitting into these three main components of willingness, ability, and traceability. Now, moving into a bit about the MSME industry in India. So, definition perspective, according to the MSME Act of 2016, if there's a capital investment in enterprise within 100 million, it would be classified under MSME. For services, it has been kept at 50 million. Today, we are talking of there are around 58 million MSMEs in India, which contributes from an employment perspective to 100 million plus people are employed in the MSME space. So if we talk about the size of the space, just to give an indicative, agriculture is the space which employs the highest number of people. Post that, MSME is the space where the highest number of people are employed in. Now, from the impact to the economy, it contributes roughly around 37% to the GDP of the country. And from a manufacturing output perspective, there's around 40% contribution that comes from the MSME space. So if we look at, there's a huge potential to create employment for people. There's a huge potential to serve for the economic needs or contribution to the GDP. And obviously, if we are talking about the country touching a 5 trillion kind of economy mark, MSME is where the major growth needs to happen, because that's the bulk of the manufacturing output also. If you break down the MSME space and see which are the sectors which are the predominant sectors in the whole space, you will find retail trade as the single biggest component of the entire MSME space. There will be other important sectors like fabricated metals, there will be textile, furnitures, hotels and restaurants, repair of motor vehicles, apparel, food products, and food processing. These are some of the biggest sectors under the MSME space in India. When you talk of retail, just to give you a sense, retail could be anything. The guy you go to purchase a small cloth can be a retail. The local kirana wala would be also a retail for you. So retail is the single biggest component of the entire MSME space. Now, we are talking of 58 million odd MSMEs in the country. And if you break it down to obviously medium, small, micro, and unorganized based on the size of the enterprises, you would observe 95% of that is in the micro enterprise space. So micro enterprise space is the smallest component of the MSME. And local kirana be a micro enterprise player. There could be a local sports good manufacturer in Meerut could be a micro enterprise player. And there could be a local manufacturer of shoes in the islands of Agra also becoming a micro enterprise player. So in micro enterprise place, you would find manufacturers. There would be traders associated with it. There would be service providers. So when I say service provider, there could be a local dhaba. There could be a boutique owner. That is also classified under micro enterprise. And also there's a huge portion of this entire MSME which is still very unorganized. We are talking of 27 million odd unorganized micro enterprises. Today, when you look at the definitions and when you come across literature, you would find there's also a space that is also referred to as nano enterprises, which is kind of the smallest of micro enterprises that are operating. So one big piece of the economy, which is MSME, and 95% of that is micro enterprises. iFinance as a company, which I'll touch upon in the next couple of slides, iFinance as a company focuses on the micro enterprises. It's a wide space. There are 95% of 58 million enterprises operating in this space, and huge potential, but plenty of problems. It has been traditionally ignored by bigger players in the financial services. The banks, the bigger NBFCs never lend to micro enterprises. So because of this, the true potential of the space has never been utilized. So if we are talking of economic building a 5 trillion kind of economy, the real push needs to come in the micro enterprise space, where you are talking of upskilling them, making sure that credit is provided to them so that they can holistically finally grow. This particular aspect, players that are there in the MSME lending space, banks not lending to micro enterprises, bigger NBFCs also not lending to micro enterprises. So to give you a sense of how the lending works in India, so at the base of the pyramid, you have microfinance player. Many of these microfinance players are now small finance banks and even a universal bank. So microfinance operates at the base of the pyramid, giving group loans of to the tune of 20,000, 30,000, 40,000. That's kind of the ticket size of a microfinance company. Then at the top, you would have banks lending to the bigger corporates, even the medium enterprises. Then you would find smaller NBFCs operating in the medium space, small enterprises space. And there's a big gap in the micro enterprise space, which is also referred to as the missing middle. Missing middle, why? Because obviously this space has been traditionally not catered to by banks, and we'll briefly touch upon what are the problems associated with it. But yeah, this space is not catered to by many of the bigger players in the industry, and that's the reason it is referred to as the missing middle. If you typically see what is the credit requirement of the missing middle or the micro enterprise space as such, the ticket size varies between somewhere around 50,000 rupees to around 25 lakhs. Now, that's kind of a small ticket size for any large bank operating. The profits would be low, obviously. The service, you can't have a high cost service delivery mechanism to lend to smaller players with smaller ticket sizes. So that's one of the bigger problems why the space doesn't look attractive to many of the bigger players. And the business is also pretty small. So you're talking of a business which has a turnover of between 1 million to around 10 million. But from a potential perspective or from a credit potential perspective, we are talking of 16 trillion. Some of the reports refer to around 16 trillion in debt gap in the micro enterprise space itself. So there's a huge white space. Once solved for, would have multiple players operating in, and obviously has a big chunk of the entire credit requirement of the fund. So now let's what are the problems associated with it? So 16% of these enterprises have some kind of formal credit. So rest of the players either have no credit at all, or the credit requirements are fulfilled by local money lender. And when you talk of local money lenders in India, they typically charge between 3% to around 5% monthly. So there's a huge interest that these local players charge for, and obviously the business can't be sustained with that kind of an interest. And around 80% of them are underfinanced and through informal financing that they serve for their credit requirements. So from a potential perspective and the impact perspective, no denying the fact that the micro enterprise space or the MSME space in totality has a huge requirement and a huge impact on the economy. But still, traditionally, no one has really focused on these people. Now, the reason is not that simple that, okay, the requirement is that's not led to that. That's not as simple as that. There are other problems associated with micro enterprises in India. So, firstly, there's no business documentation in a micro enterprise space. So, you would expect a local kirana store having a registration of MSME. I doubt many of them would not have. There would be no proof of income, so there's no financial statements to refer to. So you can't really judge what is the income of this individual while lending to. The third component is there's low tech adoption. So we hear that okay, the penetration of smartphone has reached good levels. A lot of people, or say most of the people, own a smartphone today, but the problem doesn't get solved there because the adoption of a smartphone and the adoption of apps beyond it. So you would want to reach out to a customer digitally, but are you able to do it in the micro enterprise space? It's still a difficult concept that where you would be able to reach a customer digitally. So sourcing can't be done digitally. That increases the cost of lending to someone. So low tech adoption plays a very critical deterrent for someone to really enter the space and start lending. The last component, which is one of the biggest challenge, is that there's no business transaction on a bank statement. Typically, when you talk about any big banks and everyone, of years before, people really solely were dependent on financial statements in the first bank statements, bank transaction details to lend to people, because that gave a sense of whether there's an ability to pay from the financial statement, which they get a sense of what's the income like. So that gives a sense of what is the ability of the customer. And obviously, there's a lot of information available on the bank transactions to get a sense of also the ability of the individual. But when you're talking of a small kirana store or a small boutique owner, uh, there's no transaction data in bank statements because most of the business still runs on cash. And people who purchase from them, they purchase through cash, and the entire supply chain is operating on cash. So because the entire supply chain is operating on cash, there's firstly no business bank savings account. So there is no current account per se. Many of the customers, the only individual account that they would have would be a Jandhan account. And many of the transaction, or the maximum volume of the transaction, is outside the entire formal bank. So there's no track of what is the volume of the individual to really lend to this guy. Now, whatever solution you have to identify or innovate on, you have to really cut around these problems associated with the lending to the space. And that cluster-based lending has come into picture. Uh, Briefly talking about Aye Finance as a company. Aye Finance started in 2014. It's a 7-year-old company. Uh, Finance focuses on micro enterprises. Today we are present in 19 odd states, serving around in 200 odd branches, and across the length and breadth of the country. The typical ticket size that we lend is roughly around 1.5 lakhs. So we are talking about the space which has a credit requirement of somewhere between 50,000 to about 25 lakhs. So we operate in the same space. So a local kirana store, the shoe makers of Agra, the garment manufacturers of South would be our local customers, who would be typical customers who would have a loan requirement of somewhere between 1 lakh to about 2 lakh. So we're talking about an average ticket size of 1.5 odd lakhs. Uh, 7 years of operations, we have lent to more than 2.5 lakhs micro enterprises, base of an outstanding principal of more than 1,800 crores as of 31st March 2020. And we have disbursed more than 3,300 plus crores since inception. The business model of Aye Finance has been focused on cluster-based underwriting. So we have developed a business model which works around Yeah. So we have developed a business model which focuses on the problems associated with lending to the space, be it on the sourcing side, be it on underwriting or assessing the risk of the customers. And that's how the cluster-based underwriting model has been divided. So firstly, it is a fin-touch model. So it's not a pure digital sourcing that we are talking of. because the customer in this space is not very tech savvy. So we have branch-based model where we source customer. So every time we open a branch, we do a cluster study, and I'll touch upon what exactly a cluster study is. We do a cluster study, we open up a branch, and we have a typical branch strength of roughly 10 odd people, and these people are on the field sourcing customers. All of these employees have been given mobile apps for sourcing of customers, filling up all completely paperless process, but mirrors the comfort level of an individual. The individual still finds a lot of comfort with a personal touch, with someone there explaining him the product, making sure he is onboarded properly, so that mirrors his comfort. The next big piece is on the underwriting piece of how do you really assess the risk of an individual who doesn't have any information to share with you. No information related to business transactions, no information related to the income of the individual. So how do you really assess the credit underwriting? Beyond this, we also focus a lot on a holistic development of the entire space. Or we have picked up a couple of clusters to really focus on a holistic development, because we feel lending is just one piece, giving money is just one piece. But if you want a holistic development, there are other really focus on, like upskilling them, making sure they are more competitive in nature. So if there are any questions, we can pick up in between. We can move to the next.
Sure, Sovan. So I think I'll begin with the questions that we got. So one we have in the Q&A right now, and anybody has any questions, please feel free to put them in the Q&A. He's asking about the ODO-OP scheme by World Bank. Is that an important step towards helping MSMEs strengthen financially?
Sorry, can you come across?
There is a scheme, ODO-OP scheme by the World Bank.
Sorry, I think I'm not very aware of this particular scheme.
Yeah.
Yeah.
Okay, no problem. Whoever asked the question, do you want to just unmute yourself and elaborate a little bit? Okay, so I'll just move to the other questions that we got. Just give me 1 second. What are the best statistical tools used for cluster-based financing? Which companies are using these tools to access the credibility of borrowers? Which other companies?
So many of yeah. So I think I'll touch upon that in the next couple of slides. But many of the companies now have started picking up cluster-based, at least not exactly in the name of cluster-based, but many of the companies have started using the same tools and techniques to guide estimating the income of say the individual. We have I've never started with the concept of cluster. Today you would find a lot of players. Space, Vistar is one of the players. Five-star the product would be different.
So when your internet is slightly, your voice is cutting a little bit. So if you just want to fix something on your end.
Is it better now?
Yeah.
So today you'd find a lot of players in this space, and many of them are using cluster based in some form or the other, because it's at the end of the day, it's an estimation of the income using industry business cluster information. So I can the companies really focus on technology. And today, five-star space, Canara Capital are operating space, and somewhat many of them use a similar method of underwriting or estimation of the income. So can't really comment what exactly would be the tools that they would be using but from a concept perspective, many of them would be using similar kind of a concept.
Yeah. The other question is, what kind of financial models can we expect for MSME lending, and how effective are they?
So I think I'll pick it up a bit later, because I have not got into the detail of clusters underwriting.
Yeah.
I think that would be a right point to pick up this particular question.
Perfect. Sure. I think the other questions are also similar. We can just take them towards the end once you cover the rest of the part.
Sure.
I think there's one that is about similarities in credit appraisal methods, due diligence process in lending to an MSFE firm and a startup. So I think that's a good question if you want to also address now or later.
So I think it's so while the credit assessment at the end of the day follows the same three basic principles of judging whether the guy or the company has the willingness to pay, whether the company has the ability to pay, or the individual has the ability
So when we are struggling to hear you a little bit, Sanjana, Pratik, let me know if it's just me or even you're having trouble hearing Sovan.
Mansi, even I'm not able to hear him. So can you please turn off your video? I think that would be a little helpful.
Yeah.
Yeah, it's just coming.
You can turn off your video, Sovan. I think it will be a little better then.
Guys, is it better now?
Yeah, you may need to speak though. I do think it's going to still break, but you can try.
Yeah. So when you're talking about the underwriting of MSMEs or micro enterprises, it's while the concept would be the same, fitting them the big concepts of ability, willingness, and flexibility. But from an underwriting perspective, it would be focused towards the same. Underwriting of the MSME micro enterprises, traditional financial service providers rely on a couple of years of vintage to adjust some
Sovan,
or
Sovan, I think we're still. I mean, I just don't want to the students to miss on the insights you're giving. Do you want to try logging off and coming back on because we're still having trouble?
sure. Let me try that.
Sorry about that. Just urge everyone to be patient. Just give Sovan 2 seconds to come back on.
Sure, let me just try that.
Sorry, everyone, for the pause. Hi, Sovan.
Hi, Mansi.
Yeah, I think it's better now.
Yeah. Sorry for that, guys. Uh, so, what I was touching upon is from a concept perspective, how do you really judge an individual from a lending? It's more or less the same. It's the ability to check whether the guy would be able to pay back the loan is what is checked predominantly, and obviously the willingness to pay back. So when you are judging on micro enterprise or in the MSME space, many of the companies, and including Aye Finance as a company, focuses on the vintage of the customer. So we are talking of people who have at least been in the business for about three years, 4 years kind of thing, so that you know at least there's a track record of the individual knowing how to really run this particular business. So if I'm lending to a kirana store, we would not want to lend to someone who is just starting a kirana store. You would want to lend to someone who has been in the business for at least 3 years, 4 years, to really know that this guy knows how to run the kirana store. But when you're getting into the startup lending, firstly, many of the traditional service financial players don't really lend to startups because obviously there's no proven track record of this business running. Since there's no proven track record of the business running, there's no income information, or many of these startups will be in red for that matter. So obviously there's no positive profits to show for. That's one big problem, what stops many of the traditional players to lend to. And secondly, a lot of this focuses on how the scale of the business is going to be in the next 3 years or 5 years. So while uh, the traditional lending to MSMEs, or for that matter established corporates, focuses on the track record of the past and obviously understanding the guy of how he's going to run the business. But in the startup space, it's completely focused on what the next 3 years or 5 years is going to look for this particular company, because currently the company would be in losses many of the times. So other specialized companies like venture debt companies, and in India you will see these companies starting to operate in there are, at least I guess, as far as I know, 3 to 5 odd companies which are in the space of venture debt, which specializes in lending to startups. So even if you go into a traditional financial service provider, you would never see many of them really betting huge on startups, because the concept, while is the same, the method of appraisal is very different, and people don't really want to focus on or lend to a new venture which doesn't have a track record of delivery. So that is the primary difference between both the types of underwriting or both the lending method to these people.
Sure, Sovan. I think that answers the question. We can move ahead to the next slides and then come back to the other
Sure,
questions. Yeah.
sure. So, firstly, defining what is a cluster. Cluster is a closed business geographical concentration of multiple players. You would find clusters in the cities of Agra, clusters in the city of Delhi. You would find clusters in Karnataka. So, in India, there are more than 200 odd clusters. There are more than 200. In India, there are more than 200 odd clusters, and there's a geographical concentration of interconnected businesses. So, in the supply chain, you would have buyers, you would have suppliers, and also the manufacturers. Now, to sustain such a kind of a cluster, there are also other ecosystem players. So, you would find Kirana, you would find restaurants, you would find boutique, which are kind of horizontal clusters. So vertical clusters are your typically shoe making cluster, garment manufacturers. You would find sports good manufacturers. You would find scientific goods manufacturer. These are kind of vertical cluster, which is focused on manufacturing as the centerpiece, where there would be suppliers supplying the raw materials. There would be buyers purchasing in the same market from these manufacturers, and there would be other businesses which have been traditionally cutting across these vertical clusters and present in all the different clusters. So if you go to Ambala, it's traditionally known for producing scientific goods or scientific instruments. And there you would find suppliers of raw materials for those. So vernier calipers and everything, you would find suppliers of the raw materials there. You would also find players who would be purchasing from the manufacturers in the same city. Now, to sustain that, obviously there needs to be restaurants, because there are people working there. There are restaurants, there are kirana stores, there are boutique owners. So multiple other smaller businesses which are common in multiple clusters. So that is kind of a typical structure. So there would be vertical clusters and horizontal clusters. While vertical clusters would be very local to any particular city, that this is a city known for this vertical cluster, horizontal clusters would be found across all the cities. So some of the examples, if you look at in Delhi, you would find women's shoe manufacturing. That's one big cluster in Delhi. You would also find garment manufacturing and pin holder manufacturing in Delhi. In Haryana, you would find rugs and carpet, power loom, you would find scientific instrument, you would find agriculture equipment. Move to Punjab, you find sports good manufacturing, juti manufacturing. In Rajasthan, there's a big market of black bangle, kota work, power loom, machinery, dairy, juti manufacturing. And Uttar Pradesh, you would find similar men's shoes, sports good manufacturing, glasswork, wood carving, leather goods manufacturing, ceramic pottery. So these are what are vertical clusters, which are very restrictive to particular cities as such. Now, similar kind of clusters are also found in other states and other cities. So if you are finding a sports good manufacturing in in sports good manufacturing in Meerut, where there are cricket bats getting manufactured, there are balls, badminton getting manufactured, rackets and cocks. You would find a similar sports good manufacturing in the state of in the state of Punjab, but there's basic difference in both the clusters. The margins that these people would be operating in would be very different from what is in Punjab to what is in Uttar Pradesh, Meerut. Now that is kind of a cluster for you to understand what is a cluster. Now, in a cluster-based underwriting, what really happens is, because these people are very similar in nature, so you would find typically in a cluster there are around 500 odd manufacturers producing the same goods. So different designs, but the same goods. Because these manufacturing units are very similar in nature, the way the processes that they follow, the skill set level of these people, since they're very common or very similar in nature, there is a certain efficiency ratio footprint that it creates. So if you go to manufacturer one and check for the sales per employees, so say for example I employ 5 people, and if you check the sales for employees, or say sales per work area, the sales per business operating expense or employee cost, you would find it is very similar in nature to manufacturer two operating in the same cluster, because the processes, the methods that they follow, and obviously the size of these businesses are so similar in nature, they have a very unique footprint. So this is what I was saying is different of one cluster in city one to the second cluster, the similar cluster in a city two. So these efficiency ratios vary in nature. When you go into the financial ratios, again, gross margin and net margin is very similar in nature. So when you're able to create a database of such information or such data as such, it is very easy to really then pick up one leg of information and really predict the income of the individual. So what iFinance has done is we use a proprietary cluster-based assessment method, which enables us to assess the income of an individual using some of these parameters. So we have 5 income assessment methods designed for 50 plus clusters that we cater to today out of 200 plus clusters that may be there in India. So we use a lot of these ratios to predict for the income of an individual. So today what the algorithm can do using these ratios is that if I go to a manufacturer who can't give me the details of his income, but at least can give me visually verifiable information that, okay, there are 5 people that I employ. I have, say, bought raw materials worth this much or raw materials size of this much. The algorithm is able to predict what is the output, the product output, and obviously then that data is corroborated to industry data to predict what could be the margin and income of this individual. So, helping you understand, if there's a shoe maker in the city of Agra, and in shoe making there are 2 big components. Obviously, there's a sole and there's an upper in their language. So, if someone talks of that there are 5 people that I employ, and I have purchased in this month sole with the size of X cross S X fit, then iFinance model, which we have developed, will be able to predict that what is the number of shoes that you would have been able to manufacture using this raw material and using these many number of employees, and then using gross margin ratios and what could be the final income of this individual. So it is an income assessment method which uses a lot of these financial and efficiency ratios. Next, this ratio is corroborated with industry data. So when you're talking of industry data, you can't really say in the industry of shoe making, individual one has a gross margin of X while the individual two has a gross margin of 3X. That never really happens in a cluster. because the operations are very similar in nature, the gross margins are also very similar in nature. So that helps corroborating the data that has been estimated at an individual level, then with a wider industry level. And obviously, using this data, since we have already led to more than 2 lakh odd, 2.5 lakh odd micro enterprises, this data now feeds into machine learning models to further predict the, say, credit worthiness of an individual. So that is the basic of cluster-based underwriting.
So, that's really actually super helpful and to know that information. We had a question from Sharmila, which was, I just wanted to clear that I think you already answered her question. She said, could you elaborate more on the credit assessment part in the absence of documentation? So, I think this pretty much answers that question, Sharmila, that because if there is no documentation, they use other data based on the cluster analytics that they have.
Yeah, so we use a lot of surrogate information that is available, and that's where the FinTouch model comes into picture, because you need to have visually verifiable information. So if you go to a business place and someone says that he employs 10 people, there needs to be 10 workstations available in the business place. So how can you just prove that 10 employees? So there are 10 employees available. There's always some loose uh, bills which talks about what is the input that he has got into for the month, so what is the number of raw materials that he has got into, what's the worth of raw materials that he has got for his manufacturing for the month. And obviously when we use this analytics tool on top of this kind of information, it gives us the entire financials for the individual. So the model today requires at least one leg of information. So there's some employee related information, some electricity. So there are also ratios like what is the sales for electricity consumed. So whatever leg of information is available to us, if there is electricity information available to us, any employment related information available to us, and the sales or purchase side information available to us, we will be able to really predict the entire financials of this individual. And because it's a prediction at the first go, which is based on some loosely kept information, that again needs to be corroborated with the wider industry information to see whether they're matching and whether there's any fudging of data that is happening. So that is the income assessment that is involved in this cluster-based underwriting.
Thanks, Sovan.
Yeah. Now going back to the same concepts that I had touched upon initially, and seeing how cluster-based underwriting fit into it, because I have been touching upon it a couple of times, that everything fits into these three frameworks. So from an ability perspective, because you have used income estimation using cluster-based underwriting, you would be able to judge the ability of an individual. Now, when you go into the intent to pay, now for intent to pay, there are traditional things that are also looked at, and obviously there are a lot of innovation that has also come into picture. So when you talk about intent to pay, you want to know whether the customer or the individual is willing to pay you back, or he is just wanting to take the loan and obviously vanish completely. So credit bureau information, if there is prior track record of paying back loan, serves for one of the intent to pay. So this is the reason why many of the individuals who have no credit bureau history, and even working professionals sometimes with no credit bureau history, fail to get a loan, because people usually solely depend on credit bureau information to judge the intent to pay. For Aye Finance, we cater to roughly at a monthly volume, we cater to around 40 to 50% of no credit history kind of customers also. So we check for bank statements. Now, obviously, very limited information available on bank statement, but bank statement analysis also gives a sense of whether there's an ability, willingness to pay or not. Because what happens is that for someone, obviously, it talks about someone who has already taken a loan or has given for checks and everything. What lenders really look for is whether there has been any bouncing of checks. That puts a question mark of intent to pay. Now, in case there's these information is not available, which is any kind of credit bureau information or bank statement information, you, because clusters are so closely knit and there's a lot of strong bonding between individuals or the players of the supply chain, a lot of supply chain feedback can also serve for intent to pay. If you talk about the buyers or suppliers of this manufacturer, you would get a sense of whether this guy provides good quality products, and obviously whether he has the intent to pay. Because if he's defaulting on his other payments, there's a good chance that he's going to default on your payment also. So this is some of the traditional and methods that are used to check for the willingness or intent to pay of a customer. Today, psychometric also plays a very important tool to judge for the willingness of customer. It's still under development. I wouldn't say that psychometric has reached the level where it can be solely or individually used for judging intent to pay. But psychometric analysis of an individual also can give a sense of whether the guy has good intention of paying or not. Similarly, today also there are psychometric tools that are in deployment, and Aye Finance has been testing a couple of psychometric tools that we had developed ourselves, so, which also talks about the ability to pay. It judges the customer's basic inherent skill set of running a business, and that gives a sense of whether the customer would be able to successfully run a venture or enterprise, and that gives a sense of the ability to pay of a customer. So psychometric in today's world is used for ability and intent in many of the organizations you would see. Now, moving to the traceability aspect, it is pretty simple that whether you will be able to trace back a customer to his business place or to his residence. And KYC document is where that comes into picture, using a lot of residence proof and address proof gives an understanding of the traceability aspect of businesses. So that exactly fits the entire underwriting mechanism that you have used cluster based to judge the ability to pay. You have used a lot of traditional as well as modern methods to judge for the intent component, and obviously KYC document gives us the traceability aspect. Uh, Today, just to help the students here, a lot of mobile phone data and say data related to call records, data related to messages of customers are also used, and obviously there is a lot of debate of privacy and everything that comes into picture when you use mobile phone information. But when you apply for loans digitally, a lot of mobile information or tele information is also collected to fit into these framework. So proven case studies or proven use cases have happened on traceability side, where you have been able to identify where a customer would be available at this point of time in case he skips your payment. But there's also a lot of models that have been developed on credit on mobile phone information to develop ability and intent parameters also. So these are some of the innovations that are happening in the industry today. Now, coming to the last step, which actually is the first step when you're starting the business, when you're deciding on a branch to open, is how do you really select for a cluster? There are 200 plus clusters, but can every cluster be lent to? What are the different things that you need to really focus on to identify a particular cluster before starting to lend? So what we do, and obviously people would be doing it very differently also, we follow an industry cluster city analysis. So firstly, we judge an industry. What is the demand and supply growth of an industry? What is the future potential of industry? So if we're talking of shoe making or food processing, what is the potential of food processing in the future? What is the share of input and export in food processing? Because even though the players are the smallest in the entire value chain, the value chain getting disrupted affects even the smallest player. But there's always a lag in which the player gets affected, but the value chain getting affected changes the dynamics of the entire players who are operating in different stages. If you look at a lot of export trends, Chinese market share or the influx of Chinese goods is another big important criteria that is looked at when you choose an industry. I'll give you a typical example. Aligarh in UP is traditionally for hundreds of years a lock making cluster. So many of the locks that many of our say grandparents and everyone used to use were from manufactured from Aligarh. Today, Aligarh lock making cluster is not very competitive because of the influx of Chinese locks, which are cheaper. Uh, so traditional players have not been able to compete with such kind of manufacturing of Chinese products. So the Aligarh lock making cluster has transformed into steel manufacturing, other say accessories of the door. These are the kind of products they have started manufacturing. So the lock making cluster has transformed into something else because of influx of foreign goods. So that becomes an important parameter to keep in mind when you really open a particular cluster to lending. Then obviously from a market potential size, you need to look at whether the business could be sustainable because of the number of clusters in that industry, whether there are enough number of manufacturers, suppliers, buyers that you can really cater to. So that becomes an important criteria, and that this obviously gets into the demand supply projections kind of thing. The next is the cluster analysis that you need to look at to see how many units are present in that cluster. So whether there's 700 odd units present in the Agra shoemaking cluster, or it is more than 1000 odd units or 2000 odd units. The size of the cluster becomes very important when you open a particular cluster to lending. The seasonality of the business. There would be clusters like winter garments manufacturing also, but is that a cluster that you can lend to, and whether that customer will be able to pay puts a lot of question mark because of the seasonality of that business is. These are businesses which would have strong revenue drivers only in the months of say starting October to about February or March, but there's a good portion which is a lean period for them, which makes it very difficult for them to pay back loans. So either as a company, you can focus on product development, which focuses on specialized product for such kind of seasonal businesses, or people really skip such kind of clusters also completely. The vintage of the cluster becomes one important criteria. Again, another important criteria to see how evolved that particular cluster would be. So you would find customers in the Agra marble manufacturing cluster whose forefathers have worked in, say, even there have been customers who have talked about their forefathers and their forefathers who have actually worked on Taj Mahal also. So we have such customers also in our uh, on our book. So the size of the cluster and the vintage of the cluster, if it's a 100 years old cluster, 200 years old cluster, plays an important role in giving confidence to a lender to see that okay, this cluster has been operating for 50 years, 100 years, and is sustainable in nature. So that's the cluster analysis that you focus on. Then the last is a city analysis, which is not very dependent on cluster, but gives a sense of the potential of the market, the population of the market, the population of the city, the law and order situation of the city, the credit bureau scrub to get a default rate of the city. What's the typical behavior of customers? You would be surprised to know that there would be cities and pockets where the credit behavior is really bad. So there's no discipline of credit behavior. So those are the cities you would not want to lend, even though there's a good potential of cluster that is there, because the typical characteristics of individuals there doesn't really support lending. What is the infrastructure there? Whether there are micro enterprise players, sorry, whether there are microfinance players already operating in the city, how many lenders are available in the city, gives a sense of how evolved the market is, and obviously the scope of other products. So while a particular city would be solely known for a particular cluster, exactly the point that I made earlier, the horizontal cluster, how evolved are the horizontal clusters, or how many horizontal clusters you would be able to identify in that particular city, gives a sense of the potential of a city as a whole when you decide on cluster selection. So while I touched upon this aspect, this plays the most important or the first step while deciding on whether you want to open up a branch, whether there's a cluster to be served for. This is the analysis that needs to be done at the first before getting into the study of that individual cluster to start lending to them. The last point, which could be an interest area for many of the students here, many of your participants, is the use of artificial intelligence and machine learning models today in be it the MSME space or be it in cluster-based lending particularly. There are strong use cases of ML models in cluster-based lending, because when you start with such kind of a lending, you always want to gather as much of data possible to predict the output of a particular input. Say, for example, I talked of the number of employees, the number of raw materials that he has purchased, or the value of raw materials that he has purchased, and then predicting what's the output of the business enterprise here. But AI ML model or ML models that we have developed skips a couple of steps in between. So while the traditional underwriting would focus on using these input variables to predict the income and then decide on whether the guy has an ability to pay, when you start lending to 100,000 odd customers, you would have enough of database of bad behavior also. You would find the customers who have not paid a loan and everything. So directly a ML model can be developed which talks of just the input variables, which talks of say the number of employees he uh, is deploying, the city he is present in, the kind of cluster he is in, the kind of business he is in, whether it's a manufacturing, service, trading. These kind of information can help you predict ultimately the behavior of the customer from a lending perspective. So while traditional underwriters focus on the three components, ML models develop straight through processing models which can directly using these input variables can predict the loan behavior of an individual. And we have as a company deployed some of these models both on our first time customers as well as on our repeat customer. Another area of uh, use case for ML models is on the side of collections or servicing that we had talked of initially in the lending process, where a lot of these ML models can predict the behavior in a given month. If the behavior of the customer has been this, a particular, say you have 6 months of behavioral analysis available with you, say some input information available with you, because there's always more stress in the manufacturing side compared to a trading side. So while if some of these inputs once fed into a model can also predict that whether the customer is going to miss the payment on a particular day, what is the likelihood of him paying in the next 5 days or 6 days. So those are also the kind of models that can be deployed, which aids the entire collection process and brings in a lot of efficiency. The fourth area, which is kind of a personal interest that I have, is straight through processing based on just images. So giving you examples. So if you are underwriting a kirana store, you typically want to know what is the size of the kirana. If you want to focus on cluster based underwriting, so what is the size of the kirana? uh, how dense is the stacks that he has, how dense he has the goods that are there, and based on that you would be able to predict what could be the income. That's a typical model of cluster based underwriting. What is an image based underwriting through AI ML is you just click a picture of the place. It's going to measure what is the dimension of that shop, what is the kind of density of goods in that particular store. And based on that, you can evaluate whether the customer is going to have the ability to pay back your loan. Very early stages of development for many of the companies, but image based underwriting is another area that people are focusing on. So no information to be fed in to the model, just click a picture and it's going to decide whether a loan should be given to that individual or not. uh, we cater to a lot of dairy customers also, and there the models have evolved to the point that the number of cattle, the type of cattle can decide whether loan should be given or not. So while an individual is required to see the number of cattle or that kind of information required, again, image-based underwriting with object identification can help you to count the number of cattle and then decide on the number of the amount of loan that should be given. So while all these models have the foundation of same cluster-based underwriting, but these models have evolved to cut down a lot of steps in between that traditional cluster-based underwriting takes into account. So just images can give you a sense of whether loan should be given. At very early stages of development today in the industry, but I think this is what the future is going to look like in underwriting to micro enterprises, because you would want to focus on efficiency at the end of the day. Uh, that's it from my side on structure-based underwriting. Happy to take any questions. And in case there are questions about career opportunities in the space, I can touch upon that.
Thank you, Sovan. I think most of the questions, like you rightly said, like models and all, have been covered. But I think we got a really good question right now from Vishank. He's asking that the government has introduced a lot of schemes to increase lending
Yeah,
to micro enterprises in rural areas specifically. Does that act
yeah.
like a substitute, or is it a threat to private lenders like Aye Finance?
So I would not. So I would not say it as a threat because so a lot of these schemes are really deployed through lenders. So if you're talking of an ECL GS scheme that was brought into picture, it was deployed through lenders. So a government scheme directly doesn't really go to the customers at the end of the day. The problem at the end of the day comes down to the interest rate that a particular government scheme is offering and the interest rate that a private lender is offering. If there's synergies of that interest rate, because there's obviously a cost involved in servicing these kind of customers because of the nature of their businesses, you can't really automate a lot of pieces. But because of the cost involved, there's sometimes a rate which is kind of higher compared to a typical salaried borrower. So while we might be expecting to get loans at a certain interest rate, when you're talking of businesses and micro enterprises, they get a rate which is a bit higher because of the risk involved in this business. So from a government scheme perspective, many of these schemes can be deployed even by private lenders, and we have also deployed some of the schemes. So it's about the synergy that is there compared to the interest rate, whether it makes sense for the business at the end of the day to deploy such kind of scheme, decides on which is the scheme that we should be deploying. But definitely, the good part about government intervening is that the focus comes to that segment, because we have started talking about micro enterprises, the contribution to the society, and obviously the impact. Government has started to focus on this space and understands that potential of this space. That creates a lot of ecosystem development. So we are seeing a lot of infrastructure development in the space, making sure the data is getting digitized and everything. So I think those schemes coming into picture develops the entire ecosystem as a whole. So I wouldn't see that as a threat. A lot of synergy needs to be identified by the lender at first to deploy those schemes, and obviously it gives that entire ecosystem a good boost at the end of the day.
Yeah. No, that makes sense. So I will take one last question. I know we are over time, 7 minutes, but the one last question that we have is: given the pandemic situation, how have you seen the like how has the environment been for collections, and what has the delinquency been like? The infusion of funds by the government, has it really helped for MSMEs? Loan lend.
Okay, okay. So I think the pandemic, while has boosted some legs of the fintech, so digital payments has got a good boost. Uh, But from a lending perspective, I think it has severely disrupted the space. So if you're touching upon collections had dropped to the levels of 20-30%, typically, which is a number of 95% plus for many of the players. So collection had dropped to a level of 20-30%. Today, good players who have been able to bring back stability have touched 90% plus collection efficiency. So we are talking about a journey from 95% plus pre-COVID to dropping to a 30% in the month of April to bouncing back to 90%. So it has been a tough journey for the industry as a whole. Um, from an NPA perspective or delinquency perspective, I think it's very initial to really say what is the level that it has touched. Because many of you would be aware of it, there was a moratorium that was given to companies or enterprises, which was of 6 months in nature till the month of August end. So the real delinquency or the peak or the impact of COVID, the real impact of COVID is still not visible. So from an NPA perspective, I think it's still going to take us till the time of February, March, or April to see what is the peak level of delinquency that would be seen. But to give a rough estimate, my sense is that it is the NPA levels are at least going to go down to the levels of 2x or 3x two compared to the pre-COVID levels. But from a time frame perspective, it is February, March where we are going to see that impact, real impact coming into picture, and the levels can go to 2, 3x of pre-COVID levels.
Right. And I'm sure this whole journey that you must have been by for businesses coming back, or life coming back, plus the infusion of funds by the government for MSMEs. I think it must have been all those factors playing the role of
Yeah, yeah,
improving collections. Yeah.
yeah, definitely. A lot of these government schemes, be it the CGTMSE, the ECLG scheme, a lot of lenders have deployed it in their own way,
Yeah.
and they have been the building blocks of this recovery. So when you're talking of the collection recovery from a 20% to 90%, and obviously the recovery in the next 6 7 months, that the journey that the lenders have to take, I think all these things really help in that. From a government perspective, the liquidity reaching grassroots level players like us who are deploying it at a grassroots level, obviously it has been slow,
So
not
yeah.
denying the fact. But I think the initiatives have been good from that perspective, that at least proactively the government has thought of that this is an important segment. The lenders operating in the segment required support and everything. So I think from a proactiveness perspective, they have done their bit, but it's about translating down to the grassroots businesses, because there will be multiple layers in between. A bank coming into picture who would be lending it to the next big players, and everyone is talking about credit assessment in their own way. So I think it's judging the risk and then getting the funds. So I think that makes it very selective in nature. But good players who have given good impact on the society and have been able to manage their collection and delinquency would stand to benefit from some of these schemes which have been purely deployed from a liquidity perspective.
Right. Thank you. Thank you so much, Sovan. I think that wraps up all the questions. It was a very interesting session, and just seeing by the kind of questions we got, I think, students clearly area of interest for the students. Thank you to all the students who attended and stayed through the session for your questions and for listening in. We hope you found this helpful. We look forward to hearing from you on any suggestions you have for Uday Knowledge sessions, or particularly on this session. If you want to reach out to Sovan, do let us know if you have any other questions you want to ask him offline. Thank you so much.
Thank you, Mansi. Thank you,
Thank you,
guys.
Sovan, for speaking.
Thank you. Thank you, Mansi. Thank you, team.